Hey folks, I'm best-selling author of The Power Zero, David McKnight. In today's video, you'll see part 3 of my conversation with CPA Chris McCormick, in which we discuss whether having real estate holdings can foil your tax-free retirement plan.
A lot of our listeners find themselves in the real estate space. We do tax planning for real estate investors. I'm sure that they've come across some financial advisors that talk about the cash value and the benefit that they can receive as real estate investors. For somebody, I'm sure you've worked with some investors yourself. What is different or what is the same for somebody who is looking to physical assets like real estate when it comes to building a retirement nest egg and planning for taxes in the future?
Well, my goal is to get my my clients at or near the 0% tax bracket in retirement. For some people, that won't ever be possible. For example, if you have a pension from a federal government or from a school or what have you, that's always going to flow into your financial life, flow onto your tax return as reportable income. And if that amount of money exceeds your standard deduction in retirement, you're going to be in a tax bracket, and it's not going to be the 0% tax bracket. So people who have real estate, they can offset a lot of the income from real estate through depreciation and things like that. But that's not always the case. A lot of people will do 1031 exchanges from property to property to property, and then so they can postpone the payment of that tax. And then when they die, their heirs get a step up in basis. So they've effectively eluded the IRS for their entire lives. But at some point, some of that income is likely to flow onto your tax return. And so long as that income is less than your standard deduction, you can be in the 0% tax bracket. But if you have massive holdings, that's not always going to be possible. And some of that real estate income can even sort of be treated from a tax perspective like a pension. And so, and at that point, you're sort of exposed to the ebb and flow of tax rates over time. And if tax rates are trending upward, then you're going to be exposed to that, what I call tax rate risk. And then some people like to use life insurance as, this is sort of the bank on yourself strategy, where you build a nest egg up within that life insurance policy. And then instead of taking, a loan from a bank, you take a loan from a life insurance company and you use the cash value as collateral against that loan. And then instead of paying the bank back, you pay back the loan on your life insurance. And can be some arbitrage there that makes it sort of sexy for people over time. It could give you some extra growth and compounding. So that's sort of my take on real estate as it relates to the type of planning that I do.
Okay, cool. So basically, knowing that real estate, you get the tax benefit from real estate, and when you retire, there's still a chance that you can end up with income on your tax return through real estate, and that's when the life insurance would come on top of the other benefit, which would be kind of be your own banker type mentality that a lot of people have. Right.
So if you are going to be on the IRS's radar, the goal would be to be in as low a tax bracket as possible. So if you say, hey, there's no avoiding the fact that I'm going to have some income on my tax return from my real estate. So we worry about the things that we can control. We don't worry about the things we can't control. So if that real estate income is always going to be there, or it could be farm income, or it could be just plain old regular income because you're working a job or whatever, then let's make sure that all of the other income is coming to us tax-free. So maybe we have some taxable income on one hand from the real estate, but let's make sure that any other income we're taking out comes from the Roth IRAs, Roth 401ks, Roth conversions, cash value life insurance, et cetera.
Mm-hmm.
Okay, folks, that was part 3 of my interview with CPA Chris McCormick. In the next 10 years, I'm looking to put 100,000 Americans on the road to the 0% tax bracket. If you would like some help implementing a balanced, comprehensive approach to tax-free retirement that shields you from the impact of higher taxes down the road, head on over to davidmcknight.com and click on the Connect with an Advisor button. I'm happy to refer you to an advisor in the Power Zero network that has been trained, vetted, and qualified personally by me. If you're a financial professional and want to learn how to become a certified Power Zero advisor, head on over to powerzero.com and opt into my free video series. And if you have any comments or questions, feel free to drop them into the comment section below. I'll respond to every single one of them personally. And don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.